Hello everyone, this is Yoko. In this channel, I will share information in English that I have gathered myself, as events unfolding in China might not be widely reported in other countries. I obtain information from various media sources, and I would appreciate your comments on the video content. If you find the content interesting, please consider subscribing to the channel and showing your support. This time, I'd like to discuss the topic of Chinese individuals considering using Japanese stock ETFs as a means to generate profits. Recently, the stock prices in Japan have been rising significantly. However, individuals in China also have the option to purchase Japanese stock ETFs in China. There are discussions about Chinese individuals investing heavily in Japanese stock ETFs, leading to warnings from ETF sellers about excess demand. This raises questions about whether Chinese individuals believe that Japanese stocks will continue to rise in the future. It's important to note that the discussions and situations in China differ somewhat from those in Japan. Let's take a look at a January 21 article from China. It reports that due to excessive purchases, Nikkei ETF trading was suspended. Additionally, it mentions the substantial buying of various financial products, including those related to crude oil. Some of these products have incurred a premium risk, with their prices being higher than the current market prices. The situation suggests that despite the rising prices of financial products, there may be a discrepancy compared to the current market prices. This phenomenon is not limited to Nikkei ETFs but is observed across various financial products. While there is a focus on Nikkei ETFs in Japan, within China, it appears that Chinese funds are flowing not only into Nikkei ETFs but also into foreign financial products. Why is this happening? It is because there is a lack of safe and profitable investment opportunities within China. In the past, the risk of corporate bankruptcies in China was relatively high, requiring high interest rates for fundraising. Chinese individuals believed it was acceptable to provide funds to companies through financial products, even if they offered a return of, for example, 10% annually. The belief was that even if major domestic companies went bankrupt, the Chinese government would somehow handle the situation, providing a safety net for investments made through high-return financial products. However, the current scenario is different, with a shortage of safe and profitable investment opportunities within China. The confidence that the government would handle complex situations, even when funding was provided through high-return financial products, is fading. This situation extends beyond the real estate industry to cases where local Chinese governments establish special entities to borrow money. Despite the relatively high interest rates, these loans circulate smoothly due to government backing, preventing defaults. However, recent policy changes suggest that local governments should repay loans borrowed at public interest rates. Instead, they are encouraged to secure funds at lower interest rates. In essence, local governments are advised to refinance high-interest and low-interest debts. Previously, local governments struggled to pay the interest on their debts, prompting the need for policy shifts. In the real estate sector, there are attempts to carefully select companies for funding. Lending to companies that may not repay the money or face bankruptcy involves risks, prompting a cautious approach. Capital is flowing to foreign countries, which are considered safer than domestic investments. This is evident in Chinese individuals actively investing not only in Nikkei ETFs but also in various other commodities. From the perspective of the Chinese Communist Party, the outflow of funds to foreign countries without effective utilization domestically is undesirable. This situation indicates capital outflow, which is unfavorable for the Chinese government. Despite warnings and information about the high risks associated with investments in Nikkei ETFs and other foreign financial products, this trend is likely to persist unless Chinese authorities implement specific policies to address it. If specific regulations are not implemented, this trend may continue. Currently, Chinese news emphasizes the high risks associated with investing in Nikkei ETFs. However, unless concrete policies and regulations are in place, the trend may persist due to the historical increase in market participation despite the associated risks. Furthermore, if the trend of investing overseas continues, the issue arises of where to invest domestically. Options such as bonds, stocks, and real estate within China come with significant potential for losses. Despite warnings from the Communist Party about the risks of foreign investments, they may be perceived as less risky than domestic investments. Returning to Japanese stocks, the stock prices in Japan have been rising significantly. Whether this upward trend continues or experiences a correction is uncertain. However, it is evident that Chinese individuals are benefiting from the rise in Japanese stock prices. Ideally, this would bring benefits to many Japanese people, but those who do not own stocks or cannot afford to invest may not reap the benefits. On the other hand, if economically disadvantaged individuals in China are profiting from this trend, it might feel somewhat uncomfortable. In conclusion, the current situation in China suggests a substantial increase in foreign investments. However, warnings from the Chinese government and financial industry insiders imply potential dangers. It remains to be seen whether a significant downturn will occur, and observing the actions of those who were considering investing in Japanese stocks while criticizing Japan is intriguing. Though it may sound somewhat blunt, considering China's negative portrayal of Japan across various sectors, these sentiments cannot be entirely ignored. That concludes our discussion for this time. Until next time.